Good morning, everybody, and welcome to uh, the Option Pit Morning Volatility Report. It took me a while. I have been talking with several people already this morning, so I have to get my head back in the game. Anyway, vol trading course. How you think about volatility. Mark and I teach the course November 7th. Go to optionpit.com/events. Okay. And if you're new to Option Pit and you want to take this course and you saw it from the volatility report, I'll give you $10 off today only. Send me a note at andrew@optionpit.com. And more, if you're new to Option Pit, you want to take the course. If you saw it here on the morning volatility report on our YouTube channel, I will give you $10 off. 137. The price, what is that? That's an eighth on a 10 lot. Not very much. Okay, not very much at all. Okay, speaking of volatility, okay, that's November 7th. If you want a little taste of what we do, there is an intro video right here. I highly recommend you take a look at that before. Now, on to the business at hand. Morgan Stanley, not great numbers. Dow down a little bit. I'm just looking at, but here's the big one. Chinese economy logs slowest growth since 2009, falling below 7%. How does the market take in this? I think this was, I don't think anybody was looking for great numbers. I don't think they were as bad as everybody thought. But as far as the vol complex goes, we had a sharp markdown on Friday into the end of the day. Let me get my right ticker up here. Okay. And what I think that's happening right now is they're starting to hammer some of these things. So where is my tick chart? All right, let's look at the 5-day chart. Again, serious. Remember, almost all day we looked at this. They were putting the weekend in on Friday almost, and then they just let it to go. 16.5 down to 15 close. Okay, that's weekend effect. Now, bloom, it's bled back in. The question is if this doesn't hold up, we're going to look at what I'm going to think is a brand new, since we had the August debacle, sustained vol low. Okay, so the Chinese news is out. It's not freaking everybody out too much, I have to say. Okay, so when you look at vol products, the November contract's down a nickel, October's up a dime. Again, and it's kind of sticking to what our VIX level is, right? That's 40 cents away. There's nothing unusual about that. The cash came up very much, but just look at it today. If VIX doesn't hold up from the weekend effect, any move from now is like a real markdown, as will be a real markdown of volatility. So, with the Chinese news out and everything not falling apart, which seemed to have been a problem, let's say in mid-August, stocks are weak, I think mostly because the earnings news just isn't great. It's okay, but it's not great. There's not enough to really rally anything. You have big news, and we've got big tech earnings coming this week, and I think that will really swing things one way or the other. But you have some weakness in the financials. It doesn't look like it's getting any better. They're just not great. They're not awful. They're not great. I don't know if it's enough to send us to 2100, but it's certainly not awful enough for us to be down 20%, I guess. So what you do see is you see some weakness in the volatility products. So with Wednesday X cycle, products like, let's say UVXY and products like VXX, okay, are going to be really sensitive because a lot of their movement now is based on the November future. The November future is going to start. There's going to be some weight on it. I think we were trading 1740 this morning. It's now down for the day. If it continues to slide a little bit, that's going to create a lot more weakness for these products. And we could see some what we'll just call like a 2-month vol lows this week if earnings are halfway decent. Right now, financial earnings, I guess because of the volatility in the third quarter, are sort of so-so. You know, the trading houses don't do super well, mostly because of sellers of volatility. Um, when you open down size, okay, that's just a difficult thing for them. But they didn't blow out. Okay, they didn't really have any big trouble. They just didn't make as much money as they normally did. So, as far as the banks go, that's not giving us any strength, but it's not contributing hugely to weakness either. All that is a recipe for volatility at this level to kind of hang out where it is or ease lower. There's a huge amount of contango in the futures. As I look here again before I close, oops, wrong chart. Right, almost everything is out of October. We have a little bit of November, but the November is, it's solidly above where we're looking for a closing VIX number. So there's a huge amount of weight will be anyway, on the volatility products come Tuesday, Wednesday. If we don't get the sustain we're looking at toward the end of the week, maybe we might see a lower number. So right now, at least the tailwind for vol, or the pressure still feels a little bit down. And already we have our sell-off is going away already, which will be a massive volatility crusher. So if the trends this morning continue, look for the major vol products to be lower. Look for VIX futures to be lower. And if the market continues to rally, we're going to see lower volatility. That's what we got. So right now, since we're looking for really bad news, and the really bad news is not coming out, the trend for whatever reason seems to be back up. And that's what we got. All right, everybody. Have a good day. We will have our open mic tonight. I still don't know about a topic. We'll probably continue the topic from last week, talking about volatility forecasting. And with that, I think Mark is back in today. So after his trip to Vegas, we'll see how that went. All right, everybody. Have a good day. We'll talk to you.